Hi, I'm Tasha from One Big Happy Life on behalf of the Financial Diet, and this is the Lifestyle Fix brought to you by Skillshare. As of 2018, over 44 million people in the US are paying off student loan debts, and collectively, they owe a whopping $1.5 trillion. There's no denying that student loan payments means that there's less money available in your budget to put towards your other financial goals. As someone that carries over $160,000 worth of student loan debt, I completely understand. In today's video, I'm going to be sharing 10 grown-up milestones that you can achieve even while you still have student loan debt. Number 1, stop living paycheck to paycheck. If you're living paycheck to paycheck, then you're not alone. According to a 2017 report by CareerBuilder, 78% of employees sometimes, usually, or always live paycheck to paycheck. There are two solutions to getting out of the paycheck to paycheck cycle: cut your expenses or make more money. When it comes to cutting expenses, focus on the biggest impact areas first: your housing and your food budget. Consider moving back in with your parents, getting roommates, or moving to a less expensive area of the country. Cook more meals at home and cut back on expensive items like meat, focusing instead on an unprocessed plant-based diet. Recognizing that there's only so much that you can frugalize your budget, I always recommend focusing on growing your income as a primary strategy. And while a higher income doesn't guarantee that you'll be able to stop living paycheck to paycheck, it does increase your odds. 51% of people who earn less than $50,000 say that they usually or always live paycheck to paycheck, but just 9% of workers who earn more than $100,000 say the same thing. Increasing the amount of money you make is one of the ways to stop living paycheck to paycheck. Over the past 7 years after I graduated from law school, I've managed to double my income even while staying committed to doing public interest work. Asking for a raise at work, investing in continued education, searching for better paying jobs, changing career tracks, and taking up side hustles are all options that can help you increase your income over the long term so that you can stop living paycheck to paycheck. But making money alone won't automatically get there. You'll also need this next grown-up habit too. Number 2, create a spending plan that you can actually stick to. In addition to working towards growing the gap between your expenses and your income, another essential part of breaking the paycheck to paycheck cycle is to create a spending plan that you can stick to. That means you need to be honest with yourself. What do you normally spend in the different areas of your life? Where do you think you're doing it right? And where do you think you can cut back? Is there a category that you want to prioritize, like paying off those student loans faster? I recommend creating a 1-year spending plan, and I have a video showing you exactly how to do it in 15 minutes or less, and I have a free budget template that you can grab to get started. I'll drop a link in the description box and in a card up above if you're interested. Staying on top of where your money goes is an essential part of taking control of your money and actually reaching your financial goals. The fact is that student loans do have an impact on your budget, and unless you make way more than you spend, you'll need to make sure that you're optimizing your finances by creating a spending plan that takes all of your life goals and your lifestyle preferences into account. Instead of wondering where your money goes every month, you'll be in full control of your money so that you can direct it where you want it to go. Number 3, pay your bills on time. Few things will ruin your spending faster than racking up late fees on everyday bills. Being a single day late paying your credit card bill can cost you up to $39 in fees. And who wants to toss that money away just because you had a momentary blip or a hectic week? When you're just starting out, paying your bills on time can be difficult. It might be a cash flow issue where your bills come due on a specific date, but your pay doesn't come in until after that date. Or it might be that you don't make enough money to pay all of your bills, no matter how well you manage your money. Lastly, it could be that you just plain old forgot, because adulting is like juggling all the things, and sometimes you miss a ball without meaning to. I've already talked about how to grow the gap by spending less and making more. And I've talked about how having a spending plan can make sure that you have the money to pay your bills when you need it. So let's focus on strategies that you can use to make sure that your bills don't fall through the cracks. First, have a running list of recurring bills and their due dates. The fact is that recurring bills tend to be due around the same time every month. Then choose a day once or twice a month where you sit down and make sure that all of your bills are scheduled to be paid, including any random bills that may have come up along the month. The easiest way to make sure to pay your bills on time is to set up auto pay wherever you can. I have my internet, cell phone, and mortgage all on auto pay. For everything else, I place the bills on my desk and go through the stack every week and then schedule them to be paid. Getting into the habit of paying your bills on time will make sure you don't wreck your spending plan with late fees and penalties. Number 4, saving a 3 to 6 month emergency fund. Unexpected and expensive things happen all the time. Unemployment, car accidents, home repairs, medical emergencies. Part of financial adulthood is having a plan to minimize the effects of these disasters, and that's where an emergency fund comes in. Once you've stopped living paycheck to paycheck, have a spending plan, and pay your bills on time, it's crucial that you plan for the future by putting together an emergency fund, which you can do even if you have student loan debt. If you don't know where to start, I have a video where Joseph and I walk through how to build an emergency fund. The general recommendation is to aim to have 3 months of savings set aside to start, with 6 months being the ultimate goal. This can feel very overwhelming at first glance, but understand that you don't have to reach it all at once. You can focus on adding 1 to 2 months per year for 3 years in order to hit your goal. Breaking bigger goals into smaller, more manageable chunks makes it far more easy to digest and allows you to create a spending plan that's sustainable, not one that's built on deprivation. Number 5, pay off high interest credit card debt. The interest rates on credit cards are really high in comparison to student loans, car loans, and mortgages. So it's no surprise that carrying a balance on a credit card can cost you a ton of money, especially if you're just making the minimum payments. Your credit card statement should tell you how long it will take you to pay off your balance if you only made the minimum payments, and how much you'd spend in total. And it isn't pretty. Those numbers should be a strong motivator for you to pay that credit card off quickly. Since you have an emergency fund, which will lower your chances of needing to pay for an emergency with your credit card, it's time to focus on getting rid of this expensive form of debt. I have a video on how to pay off debt fast in 7 easy steps, which you should definitely check out if you're trying to figure out how to tackle your credit card debt. Number 6, pay your credit cards off in full every month. Once you've paid off your credit card debt and have an emergency fund to stabilize you, the next financial adulthood milestone is to not get into credit card debt again. And that means paying off your credit cards in full every single month. This might require a shift in how you think about your credit cards. Treat them more like you would a debit card. You're spending your own money right now and not borrowing from a bank. A good financial app can help you with that, as you can keep track of what you've already put on your card and what's currently in your bank account. Paying your credit cards in full every single month means that you won't have to pay interest, and it'll help you improve your credit score. Number 7, have a good credit score. Having a good credit score gives you a huge financial advantage in life. It allows you to get the best interest rates on your mortgage or your car note, or even determines if you can get a loan in the first place. Your credit score is made up of 5 parts: your payment history, including missed payments or bankruptcy, the amount of money you owe, especially in comparison to how much credit you have access to, the length of your credit history, the types of credit you've used, and whether you've been seeking new credit accounts recently. Working on all of the other financial adulthood milestones that I've mentioned already will improve your credit score dramatically. You're paying all your bills on time, you've paid off all your credit card debt, and you're paying off your credit cards in full every month. And you're doing all of these things consistently every single year. Keep doing those things and you'll be on your way to a better credit score. Some people believe that having student loans means that your credit score is weighed down. That is not true. You absolutely can have an 800 plus credit score even with student loan debt. I do. Number 8, increase your net worth. You can figure out your net worth by adding up all of your assets, which includes your savings accounts, the value of your property you own, etc., and subtracting all of your liabilities, which would be your student loans, mortgage, car payment, from your net assets. Tracking your net worth is a great way to get a big picture view of how healthy your finances are from year to year. Joseph and I have been calculating our net worth monthly over on our channel for the last 2 years, and it's been a great motivator to make sure that we stick to our spending plan and are on track to reach our financial goals. Back in January 2017, we had a net worth of negative $229,000. We put together a plan to increase our net worth by paying off debts and setting money aside for various savings goals. As of January 2019, our net worth is positive. We reached a total of $55,400 after 2 years, which is a huge accomplishment for our family, though we do still have our mortgage and student loans. The point is that you can increase your net worth even while you have student loans, whether you choose to do it through paying off debt or saving more money. Number 9, save for retirement. It might feel strange to start saving for retirement, which is decades down the road, when you still have student loans here and now. But hear me out. When it comes to being efficient with your resources and making your money work as hard as possible for you, you will build wealth faster if you put your money where it can get the best return. To that end, if you can invest your money for a higher rate of return than the interest rate that you pay on your student loans, you will have more money in the long run. This is especially true if your employer matches a portion of your retirement contributions. That is a 100% rate of return on your money, which you just can't beat. Don't walk away from the free money that your employer is offering you, even if you're working on paying off your student loan. It's crucial that you start saving for your retirement as soon as you can. Check out my video on how to invest your money in your 20s, or watch this TFD video on one-person steps to becoming a serious investor with a $37,000 salary. The thing to keep in mind for your retirement accounts is that the longer you're invested, the more time your money has to grow. You can work on increasing your retirement contributions in the future, but for right now, your biggest advantage is time. So make sure to use it. Number 10, buying a house. Homeownership isn't for everyone due to affordability, job stability, and likelihood of needing to move in the immediate future, and a whole host of other factors. But if you're one of the people for whom homeownership makes sense and it's something that you want, you can buy a house even if you have student loans. Check out a rent versus buy calculator online to see how long it would take for a home purchase to be cheaper than renting, and then watch my video here on 10 steps to buying a home. After graduating from law school, Joseph and I have purchased 3 houses between the 2 of us, and 2 of them using just 1 income, all of which also having student loans. Qualifying for a mortgage is all about having a debt-to-income ratio that falls within a lender's guidelines, typically less than 36%. The debt-to-income ratio is a number that represents the percentage of your total monthly debt payments in relation to your total income. The lower the debt-to-income ratio, the better, both from the lender's perspective and for your own personal cash flow. Joseph and I have always made sure to keep our debt-to-income ratio under 25% of our total income. That means all of our debts, including our student loans, the mortgage, car notes, everything, have always been under 25% of our total income. Because of that, we've been able to both own homes, pay down debt, and also save for retirement. And to make that happen, we've always avoided high cost of living areas like New York City and San Francisco, where we knew there was no way we could stay within those ratios and have the kind of life we want. But we have lived in Dallas and Washington, D.C. and kept to our ratios. So if you're interested in home ownership, know that you can purchase a home even while you still have student loans, while also maintaining your overall financial health and working towards paying down those loans. Now that I've shared 10 financial adulthood milestones that you can still hit even if you have student loans, let's talk about a great place to learn some new things, Skillshare. Skillshare is an online learning community with thousands of classes in design, business technology, and more. Premium membership gives you unlimited access to quality classes on essential topics so you can improve your skills, unlock new opportunities, and do the work you love. Looking to brush up on your lifestyle photography skills so you can deck out those empty walls of yours? Check out Mark-Marie Forsberg's class, Lifestyle Photography, Capturing Inspiring Visual Stories, where she teaches you how to capture stunning stories in a styled yet natural way. Click the link in the description box to join the millions of students already learning on Skillshare today, and to take advantage of a special offer just for TFD viewers. The first 500 visitors will get 2 months of unlimited access to over 25,000 classes for free. Act now so you don't miss out and start learning today. Thank you so much for watching. Be sure to hit that subscribe button and the notification bell, and tune in here every single Friday for another new episode of The Lifestyle Fix. See you next week.